Hello everyone, Andy here. We are going to talk about Meta Platforms' crazy sell-off that we had after their first quarter report. Now what happened is that they fell 17.2% in the pre-market session after the company reported first quarter results with revenue guidance for the next quarter, missing analyst expectations. Meta also raises forecasted operating expenses and capital expenditures for the full year. So the increased costs are related to the company's AI infrastructure. As you know, they have invested heavily in AI, and they delivered solid revenue, operating profit, and EPS growth this quarter, which totally beat the analysts' expectations. And during the quarter, Meta realized its AI assistant, Meta AI. The product was rolled out across its family apps and is powered by Llama 3. Overall, the quarter's print was solid, but the weaker than expected revenue for next quarter and higher expenses for the bull year are spooking the investors. So having said that, looking ahead, Meta's quarter one in 2024 revenue guidance topped Wall Street's forecast, but its anticipated full year in 2024 capital expenditures came in slightly higher, and the company expects the CapEx growth to come from investments in servers, including AI and non-AI hardware, and data centers as it ramps up construction for its new data center architecture. Look at the key takeaways, guys. The Meta AI is expanding with plans to become the leading AI service globally. The Meta Platforms reported a quarter one total revenue of 36.5, 27% increase year over year, and their quarter one stood at 13.8 billion with a 38% operating margin. The company is diversifying its smart glasses line and opening its mixed reality OS to developers, and the positive trends in Meta apps include WhatsApp growth in the US and enhanced AI-powered recommendations in Facebook and Instagram. So looking at the quarter two, the revenue is to be between 36.5 to 39 billion, which is a good increase. Capital expenditures are expected to range from 35 to 40 billion primarily, and operating losses are expected to grow due to product development. This is the only news that spooked out the investors, guys. That news and the bearish highlights, which was increased expenses by 6% on the top of the 16% that they had before. So what does that mean to us, guys? Is just, it sounds really terrible, but the fact is actually it's a great time for you to invest in Meta. Here's why. Take a look at this chart, guys. Now the 17% drop in the stock price is totally understandable. As you can see, we had basically an average movement going on through this channel, which was obviously problematic because of basically this gap right here, my friends. So we had to correct this gap, as you can see, and we could not just go ahead and continue the channel without correcting it. Good news for the investors in Meta is the following fact, is that if you take a look at Meta's performance, our previous moving average closes right around this price, guys, right around this price, which means if you are not an investor in Meta, it's a great price right now to go in for your first portion. And look at here, stochastics showing pretty much a good reading. We are still on a crossover to a bullish trend, but that does not spook us. And having said that, don't forget AI's future revenue guidance and profit guidance for the future is considered to be high and solid for the next quarter and this year. However, the expenses was what spooked out the investors. Do I see this price drop as a severe problem for the company? No. Do we have to be cautious going into the chart at this price range? Perhaps a little bit. Is this price the right price to go in? Definitely. I think worst case scenario, we could land somewhere around here, guys, which is not a big problem for investors. If you're a long-term investor, you can always go in and average yourself out. But I see a great potential if you are basically within this price range. Having said that, I hope the video was helpful for you, and we're going to talk to each other again within the next stock analysis. Thank you and have a nice day.